Good morning, and welcome to the MannKind Corporation's call to discuss its acquisition of scPharmaceuticals. The call will be available for playback on the MannKind Corporation website shortly after the conclusion of this call, and will be available for approximately 90 days. During the course of this call, management may make certain forward-looking statements regarding future events and the company's future performance, including statements about the proposed acquisition of scPharmaceuticals, the expected timing thereof, and the expected benefits therefrom, MannKind's and scPharmaceuticals products and product candidates, including the ongoing and planned clinical trials, potential benefits and market opportunity thereof, and other statements that are not historical facts. These forward-looking statements reflect MannKind's current perspective on existing trends and information. Any such forward-looking statements do not guarantee future performance and involve risks and uncertainties, including those noted in the Risk Factors section of MannKind's and scPharmaceuticals' latest SEC filings. Actual results may differ materially from those projected in these forward-looking statements. For the benefit of those listening to the replay, this call is being held and recorded on August 25, 2025. Since then, MannKind and scPharmaceuticals may have made additional announcements related to the topics discussed. Please reference MannKind's and scPharmaceuticals' most recent press releases and current filings with the SEC. MannKind and scPharmaceuticals decline any obligation to update these forward-looking statements except as required by applicable securities laws. Please also refer to slide 2 of our investor presentation, which contains important information about the proposed tender offer and where you can find more information. Joining us today from MannKind are Chief Executive Officer Michael Castagna and Chief Financial Officer Chris Prentice. I'd now like to turn the conference over to Mr. Castagna. Please go ahead, sir.
Thank you, operator. Good morning, everyone, and thank you for joining us today. We're excited to share a transformative milestone in MannKind's journey, our agreement to acquire scPharmaceuticals. At MannKind, our mission is simple yet powerful: to give people control of their health and the freedom to live life. This acquisition is a direct extension of that mission. Strategically, this will expand our footprint into cardiorenal medicine, and that's a complement to our existing presence in diabetes. It will accelerate our growth, strengthen our commercial portfolio, and reinforce our long-term strategy to seek opportunities that build on our core strengths, extend our reach into adjacent therapeutic areas, and reinforce our commitment to delivering innovative, patient-centric solutions for those living with significant unmet medical needs. Our strategy is anchored in 5 key pillars. The first 2, Afrezza and Tyvaso DPI, are revenue-generating products today, and now FUROSCIX will be part of our key pillars. FUROSCIX will add a high-growth asset to MannKind as we look to build upon scPharmaceuticals' late 2024 sales force expansion and its Q2 launch in CKD. It will also strengthen our infrastructure by integrating the proven commercial model, cardiovascular expertise, and experienced team. Looking ahead, our clinical stage pipeline forms the final 2 pillars: inhaled clofazimine, now in phase 3 for NTM lung disease, and nintedanib DPI entering phase 2 for IPF later this year. Together, these 5 pillars will offer a balanced mix of near, mid, and long-term growth, positioning MannKind to deliver sustained value for our employees and stockholders. I would like to provide a brief overview of the proposed transaction. Under the terms of the agreement, MannKind will commence a tender offer to acquire all outstanding shares of scPharmaceuticals common stock at a price of $5.35 per share in cash, plus 1 non-tradable contingent value rate worth up to $1 per CVR, payable upon achieving certain regulatory and net sales milestones. Additionally, at closing, MannKind will repay the Perceptive debt and revenue share obligations, currently estimated to be $81 million, assuming a 9/30 closing. To support the acquisition and our broader strategic objectives, we've amended our recently announced financing agreement with Blackstone, securing $175 million in additional funding. The deal is expected to close in Q4 2025, subject to regulatory approvals and the satisfaction of customary conditions. Now we would like to turn your attention to why we believe this acquisition unlocks meaningful synergies and positions us for sustained growth across cardiometabolic and chronic care markets. The acquisition of scPharmaceuticals will diversify our revenue base and growth. With Afrezza, V-Go, and FUROSCIX, we will have 3 marketed products generating revenue. Combined with Tyvaso DPI-related revenues, our annualized run rate exceeds $370 million based on Q2 25 results. This positions us to accelerate double-digit annual revenue growth and expand our market reach. Next, FUROSCIX is gaining significant traction. The sales force expansion in late 24, the ongoing launch into nephrology, and the accelerating growth in integrated delivery networks have laid the groundwork for continued growth. In addition, the anticipated ReadyFlow autoinjector approval will not only enhance FUROSCIX market potential, but also reduce costs. Finally, MannKind and scPharmaceuticals share a strong cultural and strategic alignment, both committed to delivering patient-centric therapies for those living with significant unmet medical needs. There's strong synergy across our commercial products, with a significant percentage of CHF and CKD patients with fluid overload also living with diabetes. We feel that this provides a meaningful opportunity to unlock significant growth for the combined portfolio. By integrating scPharmaceuticals' drug-device combination expertise and its Boston-based team, we will strengthen our therapeutic presence in cardiometabolic care. Now I'd like to discuss the significant unmet need that exists for patients living with CHF and CKD. Fluid overload is a hallmark of CHF and CKD. While oral diuretics are commonly used in stable patients, their effectiveness becomes highly variable when fluid retention worsens. Nearly 60% of heart failure admissions are directly linked to this issue, yet the current treatment paradigm often falls short, with 25 to 30% of patients readmitted to the hospitals in 30 days. FUROSCIX offers a way to interrupt this cycle, helping patients keep their symptoms in check and potentially avoid unnecessary hospital admissions. Now let's talk about FUROSCIX and why we're so excited about this product. The burden of fluid overload is immense, and FUROSCIX addresses a critical gap in care by helping to break the cycle of hospital admissions and readmissions. FUROSCIX is a wearable at-home treatment that delivers furosemide, the gold standard hospital diuretic delivered subcutaneously via an on-body infusion, offering IV-like effectiveness without the need for hospitalization. It's pH neutral, well tolerated, and has near complete bioavailability, meaning patients receive consistent and reliable absorption, a key problem with oral diuretics in patients with worsening fluid overload. It's a great example of how MannKind is delivering on our mission to give people control of their health and the freedom to live life. One of the most exciting aspects of this acquisition is scPharmaceuticals' strategic approach to lifecycle management. The development of the ReadyFlow autoinjector reflects a clear focus on patient expansion through formulation and device innovation. By reducing treatment time to less than 10 seconds, the ReadyFlow autoinjector is designed to dramatically improve patient convenience, potentially enabling broader adoption across CHF and CKD populations, if approved. From our perspective, this kind of forward-thinking product strategy is exactly what we've been looking for. The FUROSCIX ReadyFlow autoinjector aligns with our commitment to optimize drug delivery and patient-centric innovation. The strategic importance of this launch is reflected in our deal structure. We've offered up to 75 cents from the CVR to the autoinjector's FDA approval, a substantial portion of the total CVR value. With an sNDA submission target of Q3 25, we'll be focused on supporting a successful launch as early as Q3 26, if approved. FUROSCIX continues to deliver strong performance, with $28 million in revenue in the first half of 2025, representing 96% growth year over year. Sales to integrated delivery networks continue to increase, reflecting growing provider confidence and increasing integration into various care pathways. This level of momentum gives us confidence in FUROSCIX's long-term growth trajectory. That's why we've tied the remaining CVR of up to 25 cents to achieving $120 million in sales by the end of 2026. We believe MannKind is uniquely positioned to scale FUROSCIX and unlock its full market potential in the future. First, we bring strong financial foundation and commercial infrastructure to support continued growth in CHF and accelerate the CKD launch. Second, our deep expertise in drug-device combination products, from development through regulatory approval and commercialization, positions us successfully to launch ReadyFlow auto-injector if approved. Third, there's natural synergy with our endocrinology footprint. The significant percentage of patients with CHF and CKD also living with diabetes allows us to leverage existing relationships, sales channels, and care models to deliver adoption. Fourth, integrating FUROSCIX into our broader portfolio will enhance scale and efficiency. Shared infrastructure across sales, marketing, distribution, and payer engagement will reduce fixed costs and improve agility. Finally, this acquisition is expected to strengthen our long-term sustainability, diversify our revenue base, and increase strategic optionality, making MannKind more attractive to employees, partners, investors, and the broader healthcare ecosystem. Lastly, I want to highlight our stairway to building value. Tyvaso DPI continues to be the foundation in the near term, providing non-dilutive funding and anchoring our inhaled therapeutics platform. Looking ahead, our newly rebranded cardiometabolic business, formerly the endocrinology franchise, will represent a major growth engine. With Afrezza and FUROSCIX, we will expand our reach across fat failure and chronic kidney disease. FUROSCIX is expected to add immediate momentum with multiple near-term catalysts. First, rapid revenue growth and growing hospital system adoption. Second, the recent CKD approval and expanded share voice. And third, the upcoming ReadyFlow auto-injector sNDA submission. Beyond cardiometabolic, we're advancing our orphan franchise with inhaled clofazimine and nintedanib DPI. Together, these programs are expected to form a scalable, synergistic portfolio that will position MannKind for sustained growth and long-term value creation. As we close today, I want to reiterate that we're thrilled to soon welcome the scPharmaceuticals team to MannKind. This acquisition will strengthen our portfolio, expand our reach, and enhance our ability to deliver value to patients, employees, and shareholders. Thank you for listening. I'll now turn the call back over to the operator to open the line for questions.
We will now begin Q&A. For today's session, we'll be utilizing the raise hand feature. If you'd like to ask a question, simply click on the raise hand button at the bottom of your screen. When you see the call on, please unmute yourself and begin to ask your question. Please limit to one question and one follow-up before jumping back in the queue. Thank you. We'll now pause for a moment to assemble the queue. Okay. So your first question comes from Brandon Wolf from H.C. Wainwright. Please unmute your line and ask your question.
Good morning. Thanks very much for taking my question, and congratulations on the acquisition. Maybe just two from me. First off, if I look at scPharmaceuticals' SG&A line, any color in terms of sort of on that spend, what's marketing versus sales and marketing versus overhead? Just any color on potential cost synergies and when you expect the deal could be accretive. And then secondly, maybe can you just talk about scPharmaceuticals' manufacturing footprint, what you intend to do with that, and how that fits into Danbury and overall capacity? That's it from me. Thank you.
Thank you, Brandon. Can you hear me okay?
I can.
Okay, great. So on SG&A, I think it's too soon to comment on that breakout and how we're thinking about it. We expect the deal to close in Q4, so that'll be an update as we get closer to the end of the year. In terms of creativeness, we do expect this to be creative as we look at this late next year, about a year after the close of the transaction. On the manufacturing footprint, obviously, as we've gotten to know the Seacoast team, a lot of work is outsourced, justifiably so where they are. We will look to see what we can do in Danbury in terms of there's testing, different things we could do there, especially as it gets ready for the sub-Q launch. Obviously, we have a large footprint, as you have seen. So not that the biologics manufacturing or fill-finish for sterile and injectables, but that's stuff that can be modified if appropriate, makes sense. But otherwise, somebody that's looking at growth opportunity, they have enough manufacturing capacity to continue to sustain the growth that we look at in the future.
Great. Thanks very much. Congrats again, and I'll hop back in the queue.
Thank you.
Thanks for your question, Brandon. Our next question comes from Olivia Brayer from Cantor Fitzgerald. Please unmute your line for your question.
Hey, good morning, guys. Thank you for the question. Can you just maybe talk a little bit more about why you decided to move into cardiorenal and where some of the biggest synergies are between SC and your existing franchise? Obviously, both from a therapeutic perspective, but also just considering that this is an auto-injector device versus typical inhaler approach.
Sure. Morning, Olivia. I think if you look at us, we've always been I'll say platform agnostic, meaning like we both clofazimine, that's on nebulizer. A lot of our history is in respiratory, but we're looking for something that would diversify our revenue stream that kind of culturally fit with the company and had some adjacency or overlap with in the areas we're looking to be, whether it's lung or endocrine. And this does fit a lot of those checkboxes that we were looking at. In terms of the overlap, I think when you look at the patients living with heart failure and CKD that are having fluid overload challenges, a lot of them do live with diabetes, and there's a large overlap. These are probably the sickest patients. They're probably on insulin. Especially if you look at like the nephrology launch, there's a large synergy in terms of where those centers are located, where our diabetes centers are located. So we believe, scPharmaceuticals has done an amazing job to get to where they are today, but bringing more sales efforts and more marketing will help grow this product faster, especially as the sub-Q can touch on the market next year. So that was a lot of the work there. And I also think the platform, when you think about that part, we actually own Vivos, as you know. And so having, I'll say a on-body injector platform, we have some experience with that. And I think there's not a lot of people there's only really 3 meaningful platforms out there in the on-body injector experience. As a company, we have a lot of deeper experience with drug device combinations as well as injectables. So we feel pretty confident in terms of being able to integrate, work together, and make sure we fulfill manufacturing challenges and opportunities that come up as well as drug device challenges. These are things that the company's dealt with for over 20 years.
Okay, great. Thanks, Mike.
Thank you.
Thanks for your question, Olivia. Our next question comes from Liz Wong from Nyquist. Please unmute your line and ask your question. And as a reminder, it is a raise hand to ask the question.
Hi, good morning. Thank you very much for taking questions. And my question is on the modification of the loan agreement with BlackRock. Is that additional $175 million just for this acquisition immediately accessible? And is that on top of the original $500 million that you announced back in early this month? And how does that, or would there be any impact on the original agreement in terms of the structure timeline, please? Thank you.
Thank you. That sounds like a great question for Chris.
Thanks. So we amended the Blackstone deal that we did just a few weeks ago. So in summary, we have now borrowed $325 million that will be effective with the close of the transaction. And then we have $50 million remaining, which is committed but unfunded from Blackstone. So that's the summary of where we ended up after the amendment.
And maybe a follow-up question on the sales force. I think, how do you expect to coordinate between the existing sales force from SC and your existing sales force? And would there be any modifications in terms of the targeting, the calling, for example, et cetera, please? Thank you.
I think that's a great question, and that's probably one we'll hold till the deal closes to speculate what the future footprint looks like, and we'll give more updates as we get closer to that date.
Great. Thank you very much.
Thank you.
Thanks so much for your question, Yun. Right. So just a reminder, everyone, please use the raise hand feature at the bottom of your screen to ask a question if you have one. Our next question comes from Brandon Folkes from H.C. Wainwright. Once again, you can unmute your line and ask your question.
Hi, thanks for taking my follow-up. Mike, I just want to jump ahead a little bit. And can you just talk about sort of how you see MannKind longer term, just strategically, right? So your pipeline, obviously, very orphan drug focused. How does this acquisition change your thinking on perhaps sort of building an orphan lung commercial organization versus sort of continuing to be acquisitive between now and the time those products come to market? And then maybe layer into that, can you just talk about sort of the focus over the next few years? It looks like the cadence of launches between Afrezza Peds and auto-injector is sort of well laid out. But can you just talk about sort of the company focus, the reason to do it now ahead of the Afrezza Peds potential launch as well?
And great question, Brandon. I think when you look out, so much, thanks to United Therapeutics, Tyvaso DPI has been phenomenally successful. And so I think when you get to our quarterly earnings, revenue, and guidance here, it's really hard for us to really think about how do you drive faster growth? What can you control with just Afrezza versus the pipeline coming? And also, the investment community these days are momentum investors and are looking for milestones that are happening at certain periods of time. So I think when we look out over the next 2-3 years, first, when you think about the, I'll say, orphan business and this business, what they have in common, I think is important. Number one, drug device combinations is kind of the heartbeat of the company when you look at that. Number two, the advocacy that has to occur in these various disease states is critical. Number three, the distribution model we liked at scPharmaceuticals. It's a closed model. As you think about clofazimine coming soon, that'll be a closed model as well. As we look at global expansion opportunities in Japan and Europe with Afrezza and clofazimine, these also become another product in our armamentarium here to bring to those markets as well. And so, there's a lot of commonalities around what we are trying to build from a capability as a company and how these all fit together. If this was a low price point product that's going to require 500 reps, that's not what we're interested in. It's a very specialized product to help patients that have very, very important, urgent need around hospitalizations, reducing readmissions, and preventing hospitalization. And when you look back in time, there's several great examples of innovations around the space. One of which we deal with every day is insulin pumps, right? It's about a $5 billion market, delivering a 100-year-old product to really help patients manage their insulin better. We see the same thing in Neulasta when I was at Amgen in terms of preventing hospitalizations there with the drug device combo. And so we do look at this as a large opportunity that really solves an unmet need. And it's a really difficult product to get to market. There's very few products that get to market that allow you to have this opportunity and the stage of launch that they're in. We looked at this as a great bolt-on that kind of fit our long-term strategic view within the endocrine space and the metabolic space, as well as the orphan lung as we look at the company together.
Great. Thanks so much for your follow-up, Brandon. Our next question comes from Tiago Fauth from Wells Fargo. Please unmute your line and ask your question.
Great. Thanks so much for taking the question. I'm just trying to understand here the revenue opportunity, right? Like the TAM is theoretically very large. FUROSCIX exited Q2 at an annualized rate of about mid-60s, and peak sales consensus is much greater than that. So what are the key drivers going forward? Is it further penetration and expansion in CHF? Is it mostly about CKD? Anything you can kind of give us at this point in terms of what can we expect from a revenue trajectory perspective? Thank you.
Hey, Tiago, thank you for the question. I think it's too soon to give guidance or speculate. I think we have to close the deal. But I think in general, what I would say is we believe continued efforts of what scPharmaceuticals has been building around Salesforce expansion, bigger marketing opportunities, raising awareness. We think they're at that value inflection when you look for adoption of our product, the number of writers you're getting, the depth of prescribing you're getting. It takes a little bit of time, and I think they're right on the cusp of that opportunity to scale the business faster and keep going. And that's kind of what we looked at and saw in this opportunity. Yes, it's a large market, but it doesn't take a lot. As you know, there's not a lot of competition to do what this product does. And so we feel that unique area is going to be well served by scPharmaceuticals.
Fair enough. Thanks again.
Thank you.
Thank you for your question, Tiago. That was your last question, team. And now I'd like to turn the call over to Mr. Castagna for closing remarks.
Thank you, everyone. This is a great milestone in the history of MannKind. Hopefully, our shareholders, our employees will start to see the opportunities that come together over the coming quarters and months. Look forward to working with you all and seeing you at the upcoming conferences. Thank you.